Hello, everybody, and thank you for joining us again for another webinar on education. Today, we are here with Noelle Hicks, shareholder at RMWBH Law Firm. Noelle, please introduce yourself.
Good afternoon or good morning, everyone. My name is Noelle Hicks again. I am a shareholder at Roberts Markel Weinberg Butler Haley in our Property Owners Association section. I am a litigation and corporate attorney. I've been practicing for a little bit over 16 years. Thank you for having me today.
Thank you for joining us. I'm Petrie. I'm Director of Client Experience here at Goodwin and Company. So let's go ahead and get started. So today we're going to be talking about communication risks, as well as Fannie Mae and Freddie Mac updates. When we talk about communication risks, we're talking about emails, meeting minutes, comments, newsletters, violation notices in any space where communication is received or sent. Defamation cases have been growing against board members, and so it's important that we understand how to avoid putting the association and yourselves in those positions. Most violations of most violations that create defamation cases are unintentional, but they do happen in routine communication. Remember, as a board member, you don't just sit as a board member, you also live in your communities as homeowners. And sometimes those two roles can get mixed up, in which a comment made as a homeowner is seen as a comment from the board. And that kind of comes with the hat of board member. One poorly worded message can trigger legal action. So prevention is the least costly pathway. So let's go ahead and get started. Today, we'll be covering what boards should and should not put in writing, common defamation risks and risk points in emails and meeting notices, how to communicate facts without increasing exposure, and how to handle sensitive topics and resident conflict. So, Noelle, what we want to talk about first is what should you put in writing? Here we have a list that presents what you should and what you should not. Do you have any specific red flag on communication concerns for board members to focus on?
Yeah, of course, Fancy. So as you mentioned, two of the main ways that boards communicate are with each other by email, and then obviously within association records, which are meeting minutes, policies, and things of that nature. So the board wants to focus their efforts on putting things in writing that are fact-based, and they want to kind of steer away from including anything that might be an opinion, things that are in the narrative, or anything like that. And I think one of the continuing themes that we'll talk about today is meeting minutes and communications between board members are things that can be used in discovery or discoverable in litigation. And so we want to just kind of keep in mind, and we'll talk about this a little bit later, is that if you don't want something to be read aloud in court or in front of other homeowners, then it's not something that should be put in writing.
Thank you so much. I think another concern that sometimes plagues board members who do serve as the secretariat that do take meeting minutes is how to properly take meeting minutes. Sometimes you want to capture the details that led up to the decision. And while that's understandable, when we think about how this looks on your end, on the legal side, the more communication in those meeting minutes, the higher the risk. I like to say that's why they call it minutes, not hours, because it's not meant to be a long dissertation. It's just meant to capture action items. So one test to see if something is okay to communicate is, would you sign it? If you could put your name behind something and you never worry about whether or not it'll come back to bite you, then chances are that communication is okay. Do you have anything to add to that?
Yeah, I would agree with that, absolutely. And then kind of to just touch on something you mentioned before, obviously meeting minutes are minutes and not hours. And so I think I would stick to a rule of thumb of using bullet points, perhaps one simple sentence about what took place at the meeting versus what was said or what conversation took place.
Awesome. And then you also want to think about why you are communicating what you're communicating, because if it can be viewed as an attack, well, that's the beginnings of a defamation lawsuit, correct?
Absolutely. And you want to kind of think about whether or not you're exposing the association to any sort of liability. That could be a very good rule of thumb.
Thank you. So when we talk about defamation risks points, like, so when are we most vulnerable to finding ourselves in a defamation lawsuit? Emails, when you're forwarding complaints that have unverified accusations, when you are in board meetings and you make statements that are unverified. The underlining thing here is unverified, right? Apart from being unverified, there's communication that must be kept private. So if you put in a public setting something that's intended for private executive session, you've already created a risk. But also, if what you say in public could be said in public, but that accusation is unverified, that too poses a risk. Do you have anything to add with that?
Right. So, and defamation, which is the claim that we're talking about here, is something that damages someone's reputation. And so, if you know that something that you're putting in writing could likely damage a person's reputation, whether or not it's true, if it's being published that way, that is something that could expose the association to liability. And really, it could expose the board member themselves to liability that does not get protected by the Volunteer Protection Act. So, you really want to keep that in mind because you could really be getting yourself into some hot water there.
Thank you. So let's define defamation. We've been talking about it for a while, but let's go in and intentionally define it. What is defamation?
So this definition here is pretty spot on. It's a false statement of fact. So not an opinion, but a false statement of fact that is published to others and causes damage to someone's reputation. And it's important that that publishing aspect actually happens. So let's think about, for example, a newsletter. If you send an email, those sort of things are considered publishing. And if it's something that could damage a reputation, a relationship, or even a person's livelihood, then that can be considered defamation.
Thank you. So let's talk about the fact framework. Clean communication isn't about saying less, it's about saying the right things in the right way. So this acronym FACT stands for factual, action-oriented, concise, templated. Um, Only state factual, verifiable things. Now remember, just because it's factual doesn't mean it's protected from becoming still a defamation. For example, an association is having issues with collections, and so they choose to publicize who has yet to pay their assessment. What is the risk there?
Well, that is something that could very well be a violation of any property code. And I really like the example that you've given here because, yes, of course, people have the right to know that the association has taken action to enforce the restrictions, but it should not be told who that action is being taken against specifically or what someone's opinion about a person violating the restrictions really are. So this acronym is really great to just kind of remind you that you should state things that are factual, make sure that it's concise. So, taking out that emotional language is really great. And then just focus on what has happened and the steps forward.
Thank you. So let's go ahead and complete the acronym. So we're on A, action oriented. This is to remind you to focus on what happened and what next step is. C is for concise, remove all emotional or editorial language. This is probably the hardest part because you're always trying to convey understanding. And sometimes that's not what your focus should be. In fact, most times your focus should just be conveying information. And then, of course, T, templated. This is one that could be very, very useful, especially if, as a board member, you are serving as the secretary and you're taking your own meeting minutes. You can create a template and allows you to know what to capture. And the best part about templates is also reminds you what to ask for. So if you go into a meeting, you have a template, you know what information you need in order to complete your meeting minutes. It helps guide the meeting. It also helps guide your completion of the minutes afterwards. So let's talk about the language that protects you. What we're referring to is ways to communicate without pulling in opinions or creating that gap that you can't quite fit into. Is it safe or is it a risk? For example, when you are stating this is not correct because of something, like the governing document states that you cannot have hardscape in your front yard, you don't want to say everyone knows you can't have hardscape. You want to instead say, per the governing documents, and if you know the section, state that as well. This is what it says we can and cannot do. And the great part about this is now you're transferring the no to the governing documents. When you start giving information without referencing where you're pulling it from, you're taking accountability for the information you're giving. Assign that accountability to where it actually originated from. For example, the governing documents or the state law. Did you have anything else to add to that?
Yeah, that's really important because as board members, you have the authority to rely on your experts, which means that, you're relying on legal counsel or a CPA or some other or your management, right? So if there's any information that you've got from those three experts that I just mentioned, it's better to kind of blame them, so to speak. I always tell my clients it's fine if you put the blame on me when you're responding to a homeowner, because it just makes things a little bit more safe. And again, it's transferring that liability from the board member itself to that expert that's given that advice.
Thank you. So handling sensitive topics. So this is a big deal because everyone who is at odds with the association, they want that information to be private. They want to be kept in a confidential communication between themselves and the board of directors, and of course the management company. And there's something else that you've mentioned before about just when you put legal counsel into a communication, that adds further protection to that communication as well. Can you speak a little bit to that?
Right. What I was talking about was attorney-client privilege, right? So privileged information are things that may not be discoverable in litigation. And so that does add that extra layer of protection to prevent someone from ever seeing that communication. But you don't want to necessarily rely on that. So just err on the side of understanding that this might be seen by someone later on.
Thank you. So we talk about communication that's not, that can lead to defamation, it's not just board of directors that need to be cautious, but we are always faced with having to deal with homeowners and residents who are also upset, who are heated, who kind of ignite you or incite you into a kind of trying to defend yourself, right? And so when you start trying to defend yourself, you start going into a place where you're no longer paying attention to all the tools that you're being provided with here. You're just trying to get through this altercation. Be cautious of those heated exchanges because the further they go, the more opportunity there is to state things that aren't supposed to be said or to say things out of anger. One rule of thumb that was shared with me by an amazing attorney that I've worked with was that walk away from it. Start typing up your email and then leave it alone because sometimes it's a little bit of a cleansing process when you finally put the thoughts down. That can help you for a little while. It'll hold you over. And so when you step away and you come back, you may find that what you were planning to send should have only been written and deleted. What are your thoughts there?
Yeah, I mean, that's something that I kind of implement into my own life as well, especially if I'm on the receiving end of an email that has fired me up. I'd not necessarily respond immediately because my immediate reaction to it is probably not going to be the best one. So that is something that we should all kind of take into account when we're dealing with situations like that. And then at the first hint of something that you believe is defamatory, some language that's defamatory, get your counsel involved because they can tell you whether or not that information is actually defamatory and then let you know what the next step should be in addressing it.
So then let's go ahead and talk about homeowner disputes because that's another exposure for the boards as well, for the board of directors as well. When you have a dispute between homeowners, when is the board supposed to get involved? When are they not supposed to get involved?
This is kind of a sensitive subject because there might be some Fair Housing Act implications. And so if there is some sort of member to member hostility or communication that the board needs to get involved in, I would first and foremost contact your legal counsel because if the board needs to determine whether or not it has a duty to step into certain situations, that duty would be created by their governing documents. And if the governing documents do create that duty and they don't actually step in, then that is a huge liability to the association. If, however, there is no liability there, and if this is a Fair Housing Act type of situation, the board may not have a duty to step in. And so it's really a matter of understanding your corporate governance and having that conversation with your counsel about when's the best time for the association to step into that.
Thank you for that information. So the golden rules of conflict communication, right? Never respond in anger, step away. When in doubt, consult management or legal counsel. Also listen to that doubt. There's a reason that it's there. Never share one resident's complaint details with another resident. Here, there's also prior board members. Sometimes prior board members, once they become just homeowners, they still feel somehow connected and tethered to the board. But if you share confidential information with them, you're opening up a risk because you are now giving a homeowner, someone who does not have the rights to this information, the information that you have as a board member. And this happens more often than you think because it's sometimes hard for the board member to let go, that they're no longer a board member, the former board member. And sometimes current board members lean on prior board members for support. And you just have to make sure that you navigate that. delicately. Keep
Yeah.
personal feelings entirely out of all official communication. Treat every written message as a potential exhibit, and silence or a brief acknowledgement is sometimes the most professional response. Do you have anything to add to that?
Yeah, I have to take these 6 things into consideration in my own practice, but also specifically number 4, just make sure that you're thinking about whether or not this comes up. If you're on the stand and this comes up and is read aloud on the record, is it something that you would be mortified by? So just keep that in mind.
Thank you. All right, so in summary, key takeaways, right? Written communication creates permanent legal records. Stick to facts and date and policies. We have to be fact-based decision makers as board members and not emotionally based decision makers. Use the acronym FACT framework: factual, action-oriented, concise, and templated. De-escalate conflict with neutral, process-driven language. And when situations are sensitive or heading towards a dispute, involve management or legal counsel before responding. So we're going to shift gears here and we're going to talk about the recent Fannie Mae and Freddie Mac regulations.
Right. So this is important because it involves condominiums all over the country. Fannie Mae and Freddie Mac are federal regulations related to lending. And so these entities have recently updated their selling guide for those who are seeking a loan to buy a condo unit. So this took place on March 18th. New updates were issued to project standards and property insurance requirements, and the updates can be found in Lender Letter LL 2026-03. And this actually came in response to industry feedback that was involving market conditions that were related to higher insurance premiums and inflation. And part of the reason why we're seeing this is because some of the more tragic incidents that we've seen related to condominiums and failures of infrastructure lately. And then, of course, we're all being subjected to inflation. So this is kind of in response to that. Condo developers, as well as those looking to purchase a unit in a condo, need to be aware of these changes because it will have long-term financial impacts on condo associations and those regimes that we're talking about. So let's start out by checking on the reserve studies. Obviously, this is an important issue dealing with condominiums. And this is actually recommended based on these changes that developers conduct reserve studies as they are initiating a condo development. And this is actually more crucial than ever because these things are going to go into effect August 3rd. And lenders who obtain a reserve study to demonstrate that a condo association has sufficient reserves are no longer going to be able to use the baseline funding method. If you're aware, there are 3 different types of funding methods, and baseline is something that's not going to be available anymore. Instead, they're going to have to verify that the association's budget includes the highest recommended reserve allocation in that reserve study. So this is something that's very important, especially for developers to look at.
And so for something like this now, and as we're entering budgeting season, timing is pretty good here for us to put this into consideration, because what this means is in budget season, we might have to reallocate funds differently to ensure that the association is fully funded in their reserves. Or, and this is the part that's going to touch everybody, there has to be assessment increases to create the additional revenue in order to meet this expectation. And so this is something that Goodwin and Company will support with as that time comes, but just kind of want to put this on the board members' radar.
Yeah, for sure. And on the next slide, we'll talk a little bit more about that reserve allegation because on top of what I just mentioned, Fannie Mae and Freddie Mac have actually revised their reserve allocation requirement for capital expenditures, which is what you were just mentioning, and then also deferred maintenance. So that number has gone from 10% to 15% of the condo's annual budget. So this essentially means that beginning January 4th, 2027, associations are going to have to ensure that 15% of their total annual budget goes towards funding the reserve, with the only exception to that being that the association is fully funded per the reserve study when that 15% would not be mandated. So that's the difference there. We're going from that 10% of the annual budget up to 15%, and that can be a substantial jump for some condo associations. The other thing that's important to look at is the insurance requirements. So there's an adjustment that's going to be made to those as well due to this change in the market. Fannie Mae and Freddie Mac are also responding to those changes with these adjustments. And they are just kind of looking at what the insurance requirements for condos really should be. And this is, again, a developer thing to keep in mind, but also if you're looking to purchase a condo unit. So going forward, to assure that the condominium is actually in compliance with these new insurance requirements, developers and associations are going to have to make sure that their master property insurance policy coverage amounts to at least 100% of the estimated cost of replacement of the project. And that should also include the common elements and residential structures. And so this means that lenders are going to be able to use any of the things that I've listed here on this slide to make sure that that coverage amount is sufficient. So we're looking at guaranteed replacement cost coverage, maybe the project's insurance risk appraisal, or even a statement from the insurer or other professional about what that determination, that insurance determination really looks like.
Thank you. And this is something that we can also flesh out with the board specifically. Thankfully, the insurance market has calmed down a little bit. We're definitely not seeing the prices that we saw 2, 3, 4 years ago. But this would be something that we'll individually, board members should reach out to their managers to help navigate these concerns or these changes.
Yeah, that's an important issue that you just mentioned because during the last 101 that we had in the Austin area, the insurance professional mentioned that things are calming down a little bit, and so that's great to hear. This is going to change things for condos either way, right? Because in addition to what I just mentioned, going forward, the master policy is no longer required to cover roofs on a replacement cost basis, even though the roof still needs to be insured on no less than an actual cash value. So that's something that can kind of be factored into the policy and it can change the premiums, right? On the association side, the association must have insurance with a maximum deductible of $50,000 per unit. So that's really important. And I think the last thing that we really kind of wanted to talk about is the standard of care. Now, here you see the standard of care for a single family community in Texas, but there will likely be a very similar standard of care for any community all over the country. It's a reasonable standard of care. And also looking at the business judgment rule, in some states, you're going to see that a condominium has a different standard of care. But the point of all this is that the association's duty, the board member's duty is to make sure that the association has proper insurance coverage and also that it does those reserve studies on a pretty consistent basis to make sure that things are properly funded and that the association can take care of all of its operational costs as well as any maintenance or anything that might come up in the future. And so then finally, as you mentioned earlier, Fancy, these changes to the standards for Fannie Mae and Freddie Mac will likely force some assessment increases. It may not, but it certainly can. But the standard of care is really important because board members absolutely have to make sure they're taking a look at this and implementing these things as changes occur. But the association's board of directors needs to really remember that it has the ability to rely on its experts. That means me as their legal counsel, you as their management, reserve study professionals, accountants, and things of that nature to help them make the proper decisions.
And when it comes to making sure that you have access to those professionals, Goodwin and Company does have partner organizations that we work vendors that we work closely with that can support you with that. If you haven't already done or inquired about a reserve study, you can reach out to your manager who can connect you to one of our preferred vendors for that, which is ReserveWise. But is there anything else you have to add here?
No, I think that we pretty much covered it, but just again, making sure that everyone's relying on their experts, asking the proper questions, getting the advice that they need so they can make the best decisions for their community.
Noelle, thank you so much for your time today and supporting us with board leadership. We really appreciate you.
Absolutely. Thank you so much for having me.